Good morning, good afternoon, or good evening, depending on where you are. And welcome to our today's webinar. It's going to be on nuts and dried fruit, and we will in more detail look at the almond market and the sultana market. So these two very large categories in the nuts and dried fruits are the focus of today's webinar. So we hope you enjoy the webinar. We will discuss the current market trends. We will look at the Expana benchmark prices for these markets, and we will look at we'll try to look at expectations. We will explore the drivers for these markets and look at expectations for the rest of the year, for the next 4 months. So just to introduce myself, my name is Jara Zicha, and I am a market reporter at Expana for nuts and dried fruits, and I'm joined here by my colleague Aidan Wright, our expert on almonds. Just to let you know, this whole webinar is recorded, and so if you miss any part of the webinar, we will share the webinar later, probably tomorrow. You will receive the webinar into your inbox. For any questions, if you have, please use the question box, which you can find in the top right corner of this platform, and we will come back to the questions at the end of the session. So let us start. But before we do that, I would like to just say a few words about Expana, who we are, what we do. We are the leading price reporting agency for agri products, and we have over 200 years of collective history. We have recently rebranded as Expana, so you might have known us previously under different brands, such as these you can see here on the slide, such as Minteg or Örneberry Feed Info, Tropical Research Services, or Strategy Grains. On our side, we have coverage of over 28,000 dataset price series across a large number of markets and over 600 price forecasts. And as the core of our business, we provide pricing data and market insight to help our clients with their purchasing decisions. We are IOSCO compliant. What this really means, if you haven't heard of IOSCO, we are signed up to best practices, and then we are very transparent about what we do. We are happy to discuss this further with you if you're interested to know about IOSCO, our practices on our benchmark prices. So please reach out to us to nuts@expanamarkets.com. So as I mentioned today, the agenda is quite simple. We will firstly look at sultanas, and then my colleague Aidan will take you through the almond market, and at the end we will have a Q&A session. I think I've already briefly introduced myself, so let's start with the sultanas. So as I said, I mean, if you are involved in this in the nuts and dried fruit, this is probably the largest category in the dried fruit segment, and it has been a very interesting several months past year in the sultana market. And what it best illustrates is this graph on the left-hand side. So what you can see here, these are Expana benchmark prices for Turkish sultanas, standard type 9 FOB Turkey. And as you can see, there has been a huge surge in prices. So most of this presentation now will be around this surge in prices, what has caused the surge in prices, and what is the outlook, what are the market expectations or the market sentiment, the drivers looking slightly forward. So when you look at the graph, you can see about this time last year, or maybe July, so maybe some 13 months back, that the market was quite depressed at the time. Sultana prices were at very low levels. You were at the time you were probably looking at the market around 1600 mark, $1,600 per metric ton, and it was a very interesting part of the year last time, June, July. They were still at the time, despite the market at the time being quite weak, there were still expectations, some bearish expectations that maybe the market could move down a bit more, because at the time the crop was developing really well. There were good expectations for the 23-24 crop. But suddenly, what happened? Western areas of Turkey received so much rain in May and June, and suddenly the prices started going through the roof. There were few additional drivers which really drove the market during the past year. As suddenly it became clear that the crop would be quite short, it was obvious that there would be very low or no carry out into the 24-25 campaign, which is starting very shortly, which is starting in September. Throughout the year, it was really hard for packers in Turkey. It was really hard for some of them who had commitments and were short and had to dip into the free market in Turkey. It was really hard for them to source product in Turkey. So it was quite difficult for sellers. What we heard at the time, the past few months, there were not many sellers in the market. It was hard to find offers if you were looking for offers. And the market started moving up. There was maybe around January this year, January 24 time, there was a slight decline in prices. Maybe in December, it was around Christmas time. So at that time, few buyers or few traders came into the market and bought some volumes. But from then on, we just saw prices moving over $4,000 a metric ton quite recently, so to record highs. Now the market is little bit easing as we coming towards the new crop. I will just touch on this a little bit later in this presentation. So these have been the key drivers over the past 12 months, and what's been also a driver the past few months, it's becoming clear that the 24-25 crop, or the supply in Turkey, is going to be quite tight. And again, I will touch on this a little bit later on in this presentation. So I've prepared a couple of slides for you. This is just a quick look back in time into last year, May, June 2023, some better maps, and I also have a slide with the most recent better conditions in Turkey. And this is just when I mentioned that we saw problems in Turkey in May and June last year. These two weather images just to show you that indeed it was really wet in Turkey in May, June last year. In May, over 200% precipitation, over 200% above the 30-year average, and in June, this is in the key western areas around the Manisa region. And in June, almost 5 times higher than the seasonal average in June. So really, really heavy precipitation. Farmers were not prepared at the time. They couldn't get into fields to spray the lines with chemicals, so this caused so much issue. We saw problems with humidity and humidity-related diseases such as mildew, which is also impacting the crop, which is impacting the crop now for the new campaign. And this led to reduction in the production yield. So when I'm talking about production volumes, I'm sure you're well aware for 2023, 24, the production is estimated at 206,000 tons. This is a huge decrease on the 22-23 campaign, and a huge decrease on the 5-year average. The 5-year average is the dotted purple line. For the 24-25 crop, the INC, the International Nut and Dry Fruit Council, published an estimate in May, pegging the crop at 250,000 tons. Sources in Turkey, I think they're still they are aligned with this estimate. We've seen some quite recently. We've seen some unofficial estimates pegging the crop at lower, maybe closer to 200,000 tons. But I believe it's still quite early. We have to see how the season develops, and we have to see how the exports performing in the new campaign. So the 250,000 tons is the official figure at the moment for the 24-25 campaign. And it's a quite nice increase. It's about over 20% increase on the previous campaign. It's still down the 5-year average, but unlike last year, there's one very important side of the supply scenario, that Turkey is not carrying over any stocks into the 24-25 campaign. So if 250,000 tons is produced, that's the supply in Turkey in 24-25 campaign. What we're hearing at Expana is some volumes, maybe around 10 to 15,000 tons, are being carried over in the free market, but it's very likely that these volumes are already contracted. The TMO, the Turkish TMO, which is the Turkish Grain Board, an intervention agency in Turkey which intervenes in the market in case prices are low, is this year it's not sitting on any stocks. Last year they were sitting on quite substantial volume, which they sold to packers in June, July, I think it was. So it's still the supply is still looking quite tight heading into the 24-25 campaign in Turkey. So as I said, I had some graphs had some weather maps on the 23 last year, May, June. So I thought it would be good to have a look how the current crop or the new crop is developing, what the weather's been like. Just touching on the winter months, the February, March, where the temperatures were above average. We saw some mild weather in these months, early, late winter, early spring, and so the vines started developing early. These caused some concerns for frost in Turkey. Fortunately, there was no frost early in the spring or mid-spring. But as you can see on the maps, on the top, May and June, unlike last year, have been extremely dry this year. Very different situation in Turkey this year, and the farmers and sellers in Turkey would just confirm this. In July, as you can see, that's the weather map in the top right. Plenty of rain, central areas of Turkey, southern areas of Turkey, but luckily the Manisa western parts of Turkey, they had some rain, but it was nothing which would cause some problems for farmers. So this year it's been quite different. It's been actually very warm, very hot. These are the weather maps, weather images at the bottom. You can see in June, extremely hot in Turkey, and July, the temperatures also above average, very often coming close to 40 degrees in some parts of Turkey. So what this has meant, the mild winter and a warm winter, warm early spring, and very hot summer means that the crop is early. What we hear is about 10 to 15 days early this year. what we're hearing that the farmers, sorry, the harvest is slowly starting in some small volumes. The bulk of the harvest will probably be done in the second half of August. So will start in about 1 week time. What we also hear that the number of bunches per wine is smaller this year, and the 24-25 harvest will yield more larger size fruit. Very recently, I think it was last year, Tarish, which is the largest cooperative in Turkey, announced they advanced purchasing prices for the new campaign, and it was announced at 100 lira per kilogram. This was the earliest announcement from the Tarish on the new campaign, and the 100 lira comes at $3 per kilogram. It was quite widely anticipated before the announcement was made that it would be around that level, but this is still quite big increase on the last year. When you look at these are just prices, these are purchasing prices for raw material from farmers, so you still have to add another. If you look at metric ton, you have to add another $400 to $500 to get these prices to FOB levels, which brings you to about $3,400, $3,500 per ton, and it's roughly in line with where we're seeing offers on the 24-25 crop at the moment, and I'll just touch on this again slightly later in this presentation. I thought when I talk about Turkey, there are two important areas I have to touch on, and these are interest rates and currency, having a huge impact on the market, both interest rates and currency over the past, I don't know how many years. In terms of interest rates, as you can see on the chart on the left-hand side, these were coming down up until 2023, June or July 2023, and this was despite the inflation soaring, going through the roof completely in Turkey, and the Turkish central bank just maintained its policy of cutting the interest rates, just creating a lot of problems and chaos in Turkey. And but over the past year, there have been several hikes. So at the moment, when you look at the key rate, it's at 50%, so a huge increase. And what this means for packers, what this means for factories in Turkey, that the borrowing costs are really high. This is a big problem for them. So that there's two things coming at the same time for the industry. So very high interest rates, very high financing costs if they if they have commitments that they would like to buy a bigger volumes. This is quite problematic, especially for smaller processors. But at the same time as they have high interest rates, they also have very high raw material prices. So that's an area these are quite bullish factors at the moment in Turkey. And we also have to mention currency when we talk about interest rates. The lira has been just depreciating against the dollar, despite the effort by the central bank in the past several months to steady the lira. They might have succeeded a little bit, as you can see on the chart on the right-hand side, but nonetheless, the lira keeps depreciating against the dollar, which means that the prices in dollar terms it's having a weakening effect on prices in dollar terms. Which brings me to the sentiment, to sentiment, the current sentiment, and if we can say that if sentiment, when we slightly look forward into maybe another 1 or 2 months, what's happening right now in the market. It's just maybe a summary of what I just presented on the previous few slides. So as I said, we still moving into the new campaign. The supply remains quite tight. There's no carryover into the new campaign, uh, which means the crop supply is still quite short, quite low. On the other hand, what do we see? Well, what is likely if prices were maintained at quite high levels? It's very likely that the buyers will start, and they've been already looking at alternative markets such as China or South Africa or Chile. South Africa has been sold out for a few months at the moment. I think you can still get some small volumes from Chile, but uh, these prices are really high. Uh, what are we seeing right now? We've seen already some sellers, smaller, larger sellers offering the new crop, the 24-25 crop around 3,500, 3,600 levels. So it's lower than where the current crop is being offered, and it's very likely, unless nothing major happens in Turkey in terms of weather in the next few weeks, that the new season will open around these levels. What we also have to consider is the buyers is also very likely when the new season starts. Buyers will have to come back to the market after the last season when the prices were so high. So large volumes will be covered when the new season starts. At the moment, we're hearing it's still a bit quiet, but it's a holiday time. It's August, which kind of makes sense. But this will all change very soon. So that is all from me. Now I would like to hand over to Aidan.
Thanks very much, Yara. I'm Aidan. I'm one of the senior market reporters here at Expana, mainly covering US tree nuts and also groundnuts as well from various origins, both Europe and the US. I'm going to take you quickly through what we've been seeing in the almond market recently, obviously, as harvest is getting into swing, where things are at this point, and what people are thinking moving forward, kind of what we're hearing from some of our contacts, both in the ground in the producing areas, in this case California, and a lot of consumption regions as well. Next slide, Yara, if you wouldn't mind. So on the screen is our Expana benchmark prices for standards. So those standard 5% almonds, which are that kind of baseline grade, bellwether product in a lot of ways, and really reflect what's happening in terms of the direct supply and demand impacts on the market. Now, when we obviously, you've heard Yara talk about Expana benchmark prices. Now, what these are the proprietary prices which are produced as in our role as a price reporting agency. Behind each one of these prices and these assessments sits an analyst like myself or Yara, and we'll interface directly with industry. So we try and talk to the whole supply chain, buyers, sellers, traders, gathering all the data points we can, gathering trades, open offers, bids, indications of where people think the market are. And then at the end of the day, that's all distilled down to produce that price and that line graph that you can see here on the screen. Now, it's been a bit of a rocky road, as I'm sure everyone is aware, for almonds over the past few years. We've had prices significantly under the cost of production for quite some time, but recently we have had a rally with standard prices breaking above that $2 mark. The only time they've actually really broken the barrier since 2021. We've touched it fleetingly at a few points before seeing prices move back down. And we've been under cost of production for quite some time now. There has been a oversupply issue in the almond market. There's no secret really around that. And despite the fact that we've had issues with serious damage, we've had issues with drought in California at various points over the last few years, the crop has been overplanted. There hasn't really been anything that's changed from that perspective, in that acreage is still at this level. Obviously, the yields have changed. We've had significant variations of production within that. But just because of the sheer number of orchards, sheer number of trees at the moment, the production's really been at levels which are just completely mismatched with demand, which is why we've seen these subdued prices. Now we have really been moving out of that in recent weeks, really, as kind of harvest is getting underway, people are gearing up. We've seen that rally and seen that move upward just on the back of some production estimates being trimmed slightly unexpectedly. And last year we saw a real move up from the lows, which was seen in kind of the tail end of 2023, where we saw that price bottom just under 140, around the 138 mark. Now, there are some extenuating factors which have allowed these prices to move up slightly. So we did see a bit of strength just generally in the 24 season, just due to the high levels of serious damage. People were seeing it, and when they were kind of coming in, it was kind of 10, 12% at points. And obviously that requires a lot of cleaning. And when you're sorting a load that many time, trying to get it down to 5% to sell it as a standard is a bit of a problem. So a lot of people were sorting a little bit extra, trying to make a USDA grade and trying to get the associated premiums with that. Equally, when we saw those really, really low prices back in 2023, the dollar was very strong against the euro. At one point, we were reaching parity, and that really put some pressure on from the European side in terms of buyers not looking to pay more in euro terms for what was at that point a fairly similar size supply. Since then, exchange rates have eased slightly, so we have seen some more freedom to move back upwards, a bit more of that banding with between the euro and the US dollar equivalent. Now, obviously, talking about the fact that we've been under really under the cost of production for quite some years, we have seen a little bit of a turning point recently. What I normally say when I'm referring to permanent crops is it's like trying to turn a cruise ship around. Because of how long things are in the ground, it's not like row crops where you can drop in, drop out 1 year. If it's overplanted, it takes a significant amount of time to correct. Next slide, please, Yara. And that's really what we're seeing is we've obviously seen this steady increase in planted area and total acreage, bearing acreage as well. And that's been that steady increase. But the 2024 is, for the first time, really, a marginal decrease in the bearing acres. Now, it's not enough to offset the fact that compared to where demand is currently, there is still an oversupply situation if you have a year with kind of typically normal yield, particularly if you have a branch breaking crop. But it is an indication that things are starting to change. We obviously saw new plantings slow down significantly. There are also a lot of orchards which have been abandoned, increased removals, and at this stage, a lot of people are suggesting that the Land IQ figure will be revised down further when they publish their next set of estimates later in the year, just on the back of the fact that a lot of people aren't really viewing it as cost effective at the moment to continue farming. There's been a bit of the last few years obviously been a bit of a tough time. There's been a lot of people running down war chests, and we have seen bankruptcies start to come forward in some areas. We saw a couple of large private equity backed operations go under near the tail end of last year, start of this year. Some of the smaller operations as well looking to pull trees and get out. It's been hampered slightly by obviously if banks have anything kind of leveraged against the land, having trees on the land increases the value of the land. So a lot of times the banks don't want growers pulling. But a lot of the times if people are making loss, that's what they're turning to now. And it has been that realization really that people say make hay while the sun shines, but in this case, people planted almond trees while the sun was shining, and now it's taking and costing a lot of money to get them out. People aren't being able to pull everything which has been abandoned. So there seems to be a fair amount which isn't productive, but is still standing, still technically bearing, but isn't really being farmed at this point. That was what caused some of the serious damage issues that we saw this year. Obviously, perfect storm, but a lot of it was you'd have almost described as petri dishes of orchards no longer being farmed, no actives being applied to them. A lot of pests migrating from there into productive orchards, causing some issues. Equally as well this year, there's very large nut sizes. So we saw particular tightness around some of these smaller size grades, and you saw some really quite abnormal behaviour with these smaller sizes that would normally being priced at a discount, moving up to parity, and at some point to the even kind of going a cent or two above these larger size grades, particularly on Carmels and MPX, and generally smaller sizes being in really tight demand, causing a lot of issues, particularly for some of the candy manufacturers. If you have tight specifications, can't really move things around, have to stick within that, try and source that's been a bit of a difficulty. Next slide, please, Yara. But we have really seen demand pretty strong this year. You've seen those season to date shipments shown on the shown on the graph there, kind of August to June. We're still waiting on the last shipment report due out next week to see where we end the season. But it is the second highest so far for this point in the season. Shipment year on record, just behind 2020, 2021. Now, a lot of it's been buoyed by obviously the fact pricing has still been very attractive. There were people who were concerned about getting stocks. They locked it in, just really getting it as they can. And also, almonds themselves as well. They've previously been viewed as recession proof, not necessarily the case with some of the cost of living issues, but people have returned a little bit. There's been a lot of product moving, a lot of demand generally. And what we have seen at the moment too is the fact that people have been looking really to get stuff locked in. A lot of people were seeing these absolute just flurries of activity. Now, the important thing to note is that the last few years where we've had these crops, which were kind of at or above £3 billion in total availability, we've had significant carryovers at various points in the season. And a lot of the stuff which ended up being shipped out of the old crop, particularly in the tail end of the season, was essentially just people filling warehouses. And because of that, Q4 demand partially into Q1 was significantly offset by a lot of this old crop supply because it was being priced at such a discount to new crop that people were using it, they were utilising it wherever they could and looking to save money where they can. However, this doesn't really seem to be the case this year from what we're hearing on the ground. A lot of consuming regions seem to be slightly short on stock at the moment. They haven't stocked up in the same way, and a lot of what has come in has been consumed. Now, what that means is you're not starting on the back foot like they growers have been previous years, like the sellers have been. They're moving into more of a territory where there is going to be that demand for new crop. Old crop supplies aren't really weighing it down. Well, we've moved towards a level which would be described more as a healthy carryover, and that very much looks like the case. It's been significantly reduced from where it was. A lot of it is of mixed stock. People don't really know what's going to be good, what isn't. There isn't that much kind of USDA grades left. There's a lot of it has quite high serious damage. It's not necessarily good. The gooder quality stuff is often from cool growers who hold on to the last part of the season. They might be looking to move it now, but at this point, a lot of old crops are relatively near parity. There's a few people looking for prompt shipment here and there. So they tend to be just be dipping out in and out as they can. Next slide, please, Yara. Now, as we're looking towards these July shipments, obviously there's a lot of people have said they're still expecting a relatively good number. Now, there obviously has been a bit of a slowdown in July from where we've been in previous years, but on screen is just an idea of where things could end up with what's due out next week. Now, we've got all the way from 140 on the low end to 240 on the high end. Now, earlier in the year, most people were pegging it around the 500, 450 mark. This week, speaking to everyone that we've done now that the July's wrapped up, a lot of people are expecting it around 190 to 205. Most people pegging it around the £200 million mark, which would reduce our stocks to give or take just under 450, so the kind of 430 level, when you account for the fact that the initial calculations from the Almond Board, obviously they're assuming a 2% serious damage. We know at this point that it's higher. That'll be adjusting the end of season figures. And that really has reduced it to a significantly healthier level than we've seen in previous years. And obviously really giving that tale of strong demand at the end of the season, the welly that it needed to really continue. That's been that buoyant lifting factor. As we came into this season, we saw production estimates, the USDA subjective coming in at that 3 billion, the wonderful and the TNT around that 2.9, which really depressed the market for some time. But demand has been really the talking point for a lot of sellers at this point, and they've managed to reduce what they came in with the start of the year, about that £800 million mark. It's now under 500. It's more than they've managed to do for significant time. This colossal carryover has just been rolling from year to year with barely any of it getting eaten into, and it's the first time we've seen that major reduction. So when we're looking towards next season, obviously as we're getting into harvest, this is really what people are focusing on now. And if you can move on to the next slide, Yara. Now, the rally we've seen near the tail end of the season has been off the back that the USDA objective came in significantly below. We started to see prices move up kind of at the start of the year, moving into just before bloom, really. And after that, we saw a significant downward shift. It was moving up off the back of strong demand, but bloom looked fairly good. And you saw those initial estimates come out from TNT, from the USDA, and from Wonderful, pegging it around that £3 billion mark. Now, the rally we've seen recently has been catalysed by the fact that the USDA objective came in below. Most of the people we were talking to prior to the release were pegging it anywhere from 2.9 to 3.2, and most people around that £3 billion mark. So it really caught people off guard. We were talking to some people who were at a meeting as the objective was being released, and just essentially when it took us completely off guard, we don't know what to say about this. Now, obviously, it's still a lot of almonds. There's no getting away from that number. But it, yeah, really catalysed that move upwards, that rally we've seen. However, since then, we have seen some quite limited trading. A lot of people have had what I'd refer to as a sticker shock. Obviously, there's that large swing upwards, a lot of buyers waiting for the markets to stabilise. At the same time, sellers are gearing up for harvest. A lot of people are putting that ahead of selling activities. We've seen new crop sales for this point in the year significantly ahead of where we have been in the past few years. And again, lends more credence to this idea that we've been hearing, that a lot of people aren't relying on old crop to see them through. They're looking to lock in some new crop now. They're not necessarily wanting to rely on old crop throughout the kind of latter half of 2024 and well into 2025, like we've seen in these previous years, really getting on the books because that selling pressure has been reduced. There's still some people who need to get cash flow in, but a lot of people are as well sold as they'd like to be at this point in the season, happy to sit out for a little while. Buyers have been on holiday. We've had obviously a lot of people off, a lot of factories experiencing downtime just over the summer period. And people are expecting a little bit of a pickup as we move back to, as we get further into harvest, people have a better idea of what's coming in off the fields. Next slide, please, Yara. And when we're looking at these totals and kind of that total supply, it is putting us still above that £3 billion mark. So far, what we've heard, obviously, last year, particularly bad on serious damage. We're hitting these really large levels, kind of finalised around that 4% mark. Obviously, some loads significantly higher than that. And while it is very early in the season, initial indications and initial estimates that we're getting from people, a lot of people are pegging it around 3%, so slightly higher than normal, but below where we were last year, and quite a significant improvement when you think about kind of Storm Hillary passing through, a lot of the in-shell, a lot of mould. I think as well, a lot of things not being able to be harvested while they were drying. Those aren't really issues that we're seeing this year. Obviously, this is based on the USDA objective. We've just taken kind of 3% away from that as a nominal figure based on what we're hearing from industry. And there are a few caveats around this at the moment in that, firstly, as I mentioned previously, some people think the bearing acreage is likely to be lower than what's currently publicly available. How big a swing this is, no one's certain at the moment. They're expecting a slight trim, which could move this further south again. And equally as well, obviously, with the hot weather that California was experiencing this year, moisture contents are likely to be lower. And while that doesn't really impact the actual size of the nuts, it is going to impact the weight, so it will kind of trim that total production weight as well. So when we're looking at this and looking at that carry-in around that kind of 450, the question, particularly with that carry-in, is the carry-in is still what would be referred to as a healthy number. It's lower than it's been in quite a number of years, as you can see on screen. However, and a big however, the question is how much of this is usable. With the high levels of serious damage in this crop, there's been some real problems trying to get things. At this point, a lot of people with uncommitted stock and the uncommitted stock that's left from this crop, a lot of it's not particularly good quality. There are some cool growers who still have good quality, who've been holding on, waiting for that last minute sale. But from what we've heard, the majority of it isn't likely to be fit to enter the snacking supply chain, which is going to place that additional pressure on those first loads coming in out of the fields. And at the moment as well, the question is, will they just be shelled straight away? Obviously, we know people prefer to ship it as in shell, get it in, get it out as quickly as possible, but growers do have that choice. Currently, in-shell prices are below kernel prices in a lot of cases, and we have heard of some hullers actually charging a bit extra to make in-shell this year. So it may not make economic sense, particularly for the growers at this point, and if they push back, we might have a tightening if people are making less of those loads initially. Now, next slide, please, Yara. Part of what we have seen as we've had this transition to new crop, particularly over the past few weeks, is obviously I previously mentioned the fact that supplies in 2023, 2024, kernels themselves, particularly large, really tight supplies of smaller kernels and really difficult to come by, very in high demand for people who can't move around specs. And because of that, we saw these kind of size and quality differentials in a lot of cases as well. really starting to tighten up on each other, the entire almond kernel complex becoming very compressed. Now, as we've moved towards new crop pricing, as things are becoming a bit more normal, in inverted commas, we have seen those premiums start to re-emerge again. The difference between the 23.25 and 27.30 stabilizing around the 10 cent mark, give or take at the moment, rather than at parity. And that is really something that isn't expected to re-emerge this year. A lot of people are expecting those smaller size kernels to be a lot more prevalent, a lot more of these normal size differentials to re-emerge, and it really just not to be the odd situation we saw last year where 27.30s at a certain point, it wasn't a matter of money, it was a matter of finding it, and if someone had it, they'd sold it. As we are moving into harvest, obviously things started coming off the trees. It's really going to be the focal point moving forward. Obviously, keep an eye on some of the wildfires in California at the minute, but there aren't any initial issues where people are going. There are large problems that are being thrown up. It's a lot of stuff that people are aware on. Serious damage is the key one, and also just how productive and how able some people have been to apply inputs. When people have been losing money, they haven't really been wanting to apply actives, to apply really anything they need. That's likely to have left the trees stressed, and also just increased that pest damage again, though from what we're hearing, not anywhere near the level of last year. Next slide, please, Yara. Now, in terms of where the market sentiment is at this point in the year, it's relatively neutral. As I mentioned, we've seen pretty thin trading. It's all been fairly muted at this stage. A lot of people just seem to be waiting to get a further indication of quality and yields as harvest progress. There's a couple of things which indicate that, as I said, the area multiplier and things like that may be slightly lower than the objective. But really, until we're well into 2025, crop receipts have come forward. That's the number that everyone's going to be trading off. Equally as well, even on the sales side, I've spoken to people who've gone, I think the objective's actually too low. I'm pegging it closer to 2.9, but this is the number that we trade off. This is what truth needs to be until we get that better idea of how things coming in from the fields. I think people are expecting a little bit of a pickup in trading activity the last few weeks. Most of the activity we've heard about has been out of Japan, just on the back of favourable exchange rate. Europe's been quiet domestically. The US has been quiet. Canada's been quiet. China and India as well have been fairly quiet. There's a conference that's wrapping up in China, which should see a little bit of that trade resume. When you look at their shipments so far, they're very down on where they normally would be. And if they want to get stuff in for the Lunar New Year, things are going to have to start moving soon. So a lot of the sellers that we're speaking to are expecting a pick up in orders from China. Volume, however, uncertain due to some of the economic issues there. And that brings me to the end of our presentation on almonds. If anyone has any questions, please pop them in the chat. And I will now be joined by Yara, as he joins me on screen, he said, hopefully, to answer any questions that you guys have put forward. Equally, as mentioned, we're always happy to talk to everyone we can, happy to share information, what we're hearing, some of the price points that sit behind these Expana benchmark prices as well. So if you'd like any further explanation or just like to natter about the industry, please reach out to us. Our email address is nuts@expanamarkets.com, and we're always happy to sit on the other end, happy to have a chat and talk to as many people as we can. So I'm going to give it a few minutes to see if we've got any questions trickling in. I can see a few there already. None for me yet, unfortunately. So if anyone has any almond-related questions, please pop them in. But I do have a couple for Yara straight off the bat. And in the interest of time, Yara, there is someone who says they would like to have a bit more detail on demand and prices out of China. So what have you been seeing recently?
Thank you, Aidan. Can you hear me? What we've been hearing on China is the demand is certainly there on Chinese sultanas, and because of the high prices in Turkey, we've seen over the past few months. Uh, we also heard that the offers from Chinese sellers have been moving up. So if I'm correct at the moment, if you're looking at Chinese Type 9 sultanas, prices are around, I hope I'm correct on that, 2000, over 2000, I think it's over $2,000 per metric ton, $2,100 per metric ton. I think this is FOB China. And we've seen very similar prices, but cost insurance rate Europe maybe at the start of the year. So there has been definitely a firming trend on Chinese sultanas, and we've heard there is more demand for this product, not just for this product, but for some other alternative origins as well, because of the high prices in Turkey.
And another Sultana related question that will tail into another one that's just come in. So, given that you talked about high prices, do you think that buyers in Europe could discontinue Sultanas in these products if prices remain high? I'm assuming that's asking a bit about product substitution.
I, I think it depends what happens in Turkey now, and the prices have been really at elevated levels for sultana. So let's see what happens heading into the new season. I think it's quite hard for a lot of people to easily substitute from one origin to another origin. So I would say we might see some substitution. I'm sure that maybe some smaller packers, maybe less significant packers in Europe who don't have big commitments, they might maybe switch origins if they can do that. But I think for a lot of manufacturers and a lot of other packers who maybe supply to the retail, it's not always an easy option to switch origins. So I think it's a quite a lot will depend on prices. We might see some more demand for alternative origins, but as I said, with a lot of buyers, a lot of manufacturers with commitments, I don't think they can switch origins. They just cannot go to alternative origins away from Turkey.
One coming in now, just talk about what the harvest forecast is for almonds in 2024, 2025. USDA currently has it pegged around that £2.8 billion mark. Whether it's higher or lower at this stage, we're going to have to wait for crop receipts to come in, which will everyone have a bit of a better, clear idea as we move into 2025. Could see some readjustments there. Another one as well here asking about the impact of cocoa prices on the nut and dried fruit markets. Yeah, obviously everyone's been talking about elevated cocoa, elevated, should we say, chocolate pricing for quite some time now, just on the back of some of the issues, particularly out of the production areas. I won't dwell into that too much. We have some internal expertise there, both within the price reporting function, but also Expana's tropical research services, which do a lot of supply and demand work on the ground. So if you have any need for in-depth knowledge on exactly what's happening at our production regions, I'd urge you to contact them and get in contact with Tropical Research Services. But in terms of the wider impacts on the nut and dried fruit markets, obviously, as we know, a lot of nut and dried fruit products go into those confectionery markets. And what we have seen, generally talking to people, is a bit of a twofold impact. Little bit of shrinkflation. Some people are saying in terms of reduction, some of these product sizes reducing inclusions of cocoa where possible. And some that has meant higher inclusions of nuts and dried fruit when you're actually looking in terms of the volumes, like the volume actually in the makeup, some of these new product launches. At the same time, though, a little bit of a scaling back in terms of just those total volumes being moved. You can see it when, say, you look at the US peanut statistics, when you look at the amount of candy being manufactured, that is down on previous years. A lot of people are attributing that to these high cocoa prices and generally a bit of a reluctance to push forward and really put cocoa heavy products on the market just in case some people get caught short in terms of supply. And now that is, I think we will give it another moment, see if any more questions trickle in. But yeah, at this stage, I would just like to say thank you all very much for attending the webinar. If you have any questions, please reach out to us. We're available at the email address on screen, also available via LinkedIn. I'm aware, having looked at the attendee list as well, that there are some people that we are very familiar with here, so feel free to give us a ring if you've got any questions about what we've discussed today. But in the interim, we'll give it another moment and then bid you adieu. Well, I think that brings us to the end of today's session, unless I see something sneaking in out of the corner of my eye. Thank you again for attending the Expana webinar on nuts and dried fruit. If you have any questions, feel free to reach out. Equally, while we do not deal with forecasting, the PRA and editorial team, the price reporters, do not. If you have any should we say, questions about where almond prices are going in the future, Expana has a very, very good almond forecast dealt with by our men with the crystal ball in our forecasting and data team. So feel free to reach out if you have any forecasting requirements as well. Please reach out to the Expana team more generally. But thank you very much. And with that, this webinar draws to a close. Have a great day, everyone.